Hi, I'm Kep Kepner, CPA here in Dallas. So let's talk about some of the contribution limits for 2016 where you can contribute to retirement accounts. The maximum on a 401k is $18,000. So you can contribute that. Anybody who is employed and has their employer match a part of their contributions to their 401k plan should do that almost without question. That's a really important long-term strategy for an employee. Okay, if you have a different kind of retirement plan, such as a 403b, which is for the educational world if you're a teacher, or a 457 plan, they have different caps for that. There also is the ability to contribute more if you're at a certain age. It's called a catch-up. So on your 401k, if you were born in 1967 or earlier, you can actually contribute up to $24,000. So an IRA simple plan, the max is $12,500. Now that's a little different. We're getting into a simple plan very often for the owner of a business. Now you have a whole different strategy. If I put $12,500 in my simple, okay, then I get to deduct that before I compute my income tax. Well, that's great. If I'm in the 25% tax bracket, then I can save $4,000 in taxes. Isn't that wonderful? Well, the reality is you're going to pay about $3,000 in Social Security and Medicare, so you're not going to get the savings that you expect. If you have a SEP plan, a self-employed plan, you can actually contribute up to about $50,000, but you would have to have a salary of about $250,000. With that, there are a couple of strategies. One is if I pay myself less, well then I can contribute less to my SEP, but I'm probably going to save more in Social Security and Medicare than I'm going to save in tax benefits. So you have to decide, do I want my retirement funded by Social Security and Medicare that I'm going to pay even though I'm contributing to my own private SEP plan? A lot of people don't see it that way. Probably for many people, it's better to invest your after-tax savings in investments that are similar to what you would have in your retirement account. For some people, it's best to just simply put it in an IRA. You get a little bit of a deduction, and the rest of your savings you can put in pre-tax or after-tax retirement, either one. If you have a Roth IRA, the limits are going up. The higher you have in your taxable income, the less you can contribute to a Roth. And in fact, it phases out. So don't kid yourself. The IRS has thought through all of these. And the reality is that retirement is like anything else we do. There is a tax benefit for the government, and don't forget that. So if you need somebody to help you analyze where you stand financially regarding your retirement, then give us a call. We can help you with that. Let me mention another thing. I had a new client come to my office last week. He has a retirement plan that's handled by a financial planner that has a high ethical standard. He also has a different retirement plan, and in fact a third IRA. And all of this added together, he's got about $1.5 million, and he's almost 70 years old. But you know what he didn't have? He didn't have anybody to explain to him what all of that was about. Okay? One of the first strategies I defined for him was that he ought to refinance his home. And instead of paying 6.5%, get down in the 4% range, he would certainly qualify for it. and he would have the ability to pay off his house much sooner and then not have to tap his retirement for his other living expenses. So all of this fits together. You need to know what you have. You need to be astute in how you make your investments. And if you're a business owner, you have a lot of opportunities that workers don't have. So if you want to plan your strategy and invest in your business and build something of great value, that means you'll have something when you decide to retire, then we can help you with all those strategies. Give us a call,